you pay income tax. And then when you buy a property, the developer has paid tax, so you're going to pay for that. That's development taxes. And then on top of that, you're going to pay a property transfer tax or land transfer tax, depending where you live. Well, now you're going to pay tax when you sell it. I don't see taxes being the solution here.
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadyen, and I'm your host. I can't wait to get you into the flow.
All right, we've got a short but important conversation today. If you haven't already heard the news, there was an article that was published in early July in the Financial Post about the possibility of a leftist group that might be getting cozy with our current Uncle Trudy about the possibility, oh my gosh, of taxing principal residence. And if you don't think this is a big idea, well, you've got something coming. This is massive and would absolutely change the landscape of investments in our country. And, well, pretty much anyone who owns a home would be, feasibly speaking, impacted. Now, I should preface by saying this is a proposal, but it's a real proposal and it has legs, even to the point where Derek Holt of Scotiabank came out and commented on it. Well, I'm going to break down what the article said to you today in a short, sweet, focused episode, along with some comments from Derek Holt and my color to some of these points. And man, if you don't think this is big news, and you don't think this is a little bit much, then I think you've got another thing coming. This is the type of thing that would completely change the shape of housing in our country in so many ways that I don't think people even understand. Now, to start off, typically speaking, when we see these types of articles, we push them aside and poo-poo them, but there's a good authority to suggest that this is a real thing that has been considered by the current government right now. Let's talk about specifically what they're talking about, and more importantly, what could come if this were to happen. Before you go too far, if you haven't already done so, make sure to leave me a great review on iTunes or Spotify. If you're picking up valuable information about real estate, mortgage, or the housing market, I tend to focus most of my energy on money and the psychology of it, but I like to mix in little commentary like this because it's important to understand how these changes could impact you and your family's livelihood as it relates to your money and real estate. Of course, if you have any episodes that you'd like to see or anything else that you'd like to connect with me, you can connect with me at The Mortgage Pug on Instagram, at Flow Mortgage Co. on YouTube, and on Instagram as well. Let's get right into this article here, recently published. We won't take credit. It was Kim Moody who, from the Financial Post, who actually published this article. Now, the government itself was considering a home equity tax, is what they were calling it, to address fairness in housing. Man, I am tired of that word. We are a capitalist country. And don't get me wrong, we want fairness from a perspective of taking a control of how underhousing, like not enough built housing, and overpopulation. We've got some thoughts and feedback on that comment and that point. But the reality is the concept of fairness is outdated. And if we are looking for fairness, all we're going to have is government-built rentals. Now, I got too far and I got ahead of myself. Let's talk about the tax. So the proposed tax would tax people's principal residence. We don't know how much, but we can only assume it would be something similar to capital gains or what their current income tax rate is right now on their primary residence. Now, the proposal suggests that the primary target would be people who own real estate valued at $1 million or more, which as of today is 12% of the population and rising as property values rise. Now, the recent report about real estate values suggests that house prices are up 1.9% year over year, which is not massive, but it is a reminder that no different than inflation, housing values continue to increase. Interestingly enough, it's lower than inflation has been in the last 12 months. Now, with that being said, the target is older Canadians who have paid off their homes and benefited from capital appreciations. They are the primary targets of this mix. Now, again, in the commentary, I'll break down to you what the potential impact could be, but this to me is beyond crazy. Why are we? For as many jokes as we have about boomers and the great generational wealth transfer, why are we punishing people who decided to buy and own real estate and do what they thought was right for the past 30 or 40 years? To me, that just seems absolutely wrong. Now, the idea, first and foremost, this article doesn't miss the fact that Canadians are already paying taxes on taxes on taxes on taxes on taxes on buying real estate, so you pay income tax. And then when you buy a property, the developer has paid tax, so you're going to pay for that. That's development taxes, taxes to build, or taxes to renovate. And then on top of that, you're going to pay a property transfer tax or land transfer tax, depending where you live. Well, now you're going to pay tax when you sell it. I don't see taxes being the solution here, but that's what's happening right now. Now, the principal residence exemption right now, as you already know, that like if you own a home and it's your primary, and as long as you've owned it for 2 years, that's a mouthful. When you sell that property, that money is yours. That's an exemption. You don't pay taxes on money that you earn on your principal residence at this point right now. But the proposal is that you would start paying taxes on that money. Now, this think tank that's come up with this idea or concept suggests that they support the home equity tax to make housing more affordable for young Canadians. Now, not only is that false, but that's just silly thinking and short-sighted thinking. I'll talk about why in the breakdown in the next little step right here. I mean, to start off with, first and foremost, is there any reason to believe that any government or this government has fixed anything to do with housing? There isn't. And to suggest that the taxes that we just talked about right there are fixing the problem that we already know that we have, it would be silly. That is not going to fix the issue. But nonetheless, I'm not here to comment on it. I just want to talk about the article. Previous government measures that we have right now to address the issue, they've already tried foreign buyers taxes. They've already tried an empty homes tax. They already tried a flipping tax. They've already tried short-term rentals. Where are we today? Have they, with all these taxes, made a significant impact on house prices? No. Have they made an impact? Yes, of course. There was a blip for each and every one of those situations. But has it made a big difference? And the question I ask is, what are they doing with these taxes that makes you believe, or makes anyone believe, that any of this information or any of these taxes are actually helping us put more houses in the ground? Yes, they're building condos. Yes, they're building skyrises. Yes, they're building up, but they're not building what families actually need, and they're not building where they need it. They're building government rental housing. And if that's what you really want, well, I don't think you actually want that. I don't think anybody actually wants that. Now, let's talk a little bit about what our good friend Derek Holt thinks of this tax itself. Now, let's start off with his first line in his commentary on Scotiabank's recent economic announcement. He says, "Be nervous and vocal. Ever since the Trudeau government started to require that Canadians report home sales on their income tax returns, it has been feared that one of the primary reasons was for this tax alone." And if you don't believe that's the case, you've got another thing coming. Think about, well, every other tax that's come out, notwithstanding the capital gains taxes that really came out as poorly as those were rolled out, there is a reason. Now, the Prime Minister in this report itself, the Mr. Trudeau is quote unquote keeping company with this far leftist groups, and they want your home for their purposes. I mean, geez, I'm at a loss for some of this stuff right here, but let's talk about it. It's all about the idea of generational fairness, which is a completely poor logic. The idea of robbing the folks who have gained their money and paying back the folks who haven't, which is basically putting it like, and I love what he says here. It's like installing an ATM on your house and giving it away. Who knows what they do with the money? So let's talk about specifically what the impact is. And I can talk about this from a mortgage perspective pretty openly. Number one, we need mortgages on homes to buy real estate. Nobody's walking around with $400,000 or $500,000. At least most people aren't, contrary to what you might hear out there, to buy a regular condo or house, depending on where you live. Lenders look at home values as one of the primary criteria when they're lending real estate. Loan to value. It's the difference between your down payment. You better believe if they know that you're being taxed and there's a lower probability of property values increase and a higher probability of them staying the same or going down, they are going to look at those limits and require people to either A, put down a higher down payment in a variety of circumstances, or just generally lend less money. And they're not going to cry about it either, because it's not, especially when it comes to the big banks, it is not their number one source of revenue. They make more money on the fees and credit cards and everything else that you buy. Why are they going to worry about that? The lenders, hands down, will require you to put more money down. And even if it's an insurability issue, I believe that CMHC will come up with different guidelines to support that. Or they could suggest that your tax dollars is going towards that, but that's just, it lies, because lenders have to support it. Just because CMHC supports it doesn't mean that every lender will support that. The second is that the bond markets themselves would likely have the same reactions to this particular policy. And as we already know, the fixed rates are heavily based on what happens in the bond market. So if the bond markets go up, well, rates go up. And if the bond markets react to this, which they probably would, well, rates will go up. But second of all, the profitability or the price points of said mortgages or rates are based off the bond yields. And who's to say that lenders wouldn't price their rates higher based on these bond yields, therefore also increasing interest rates and volatility in the marketplace, which negatively impacts people trying to get into the marketplace. Another good point, taxing capital gains on a principal residence would work against increasing housing supply, which is the biggest issue we have. This would completely scare off those large-scale investors as the current market already has, which would even make things even worse. It would exacerbate the issue even more than it already has right now. So we're scaring off the people with the money, but we're giving the money to the government to build what? Again, government housing? Not a good thing. Most people don't actually want that. We know that not only would it impact everybody, well, it impacts everybody as a home. If it's looking for seniors, this would completely shock the system as it relates to the current retirement plans for a vast majority of seniors in our country. Now, you might say, boo-hoo, too bad for them, but that would cause a massive landslide of issues and adversely affect the money that's coming to their children and their children's children. And just basically, instead of giving the money to you or your family or friends or whatever, that money is going straight to the government. And not only is it unfair, but if we think about it for the fact that most of these people work their lives to put themselves in a situation to be able to turn these homes in for their retirement or sell them to someone else who's going to love their home. Well, why? Like it just seems wrong in every way, shape, or form. Housing itself, we talked about this. Housing is tax on tax on tax right now. You get taxed when you get paid. We talked about this before. You get taxed with all the levies. We get taxed on honestly everything that you do, renovations, every single thing you do, you get taxed on. If they want to do something useful, they can do something useful already. There's enough tax coming in that the governments could do something useful and stop this from being an issue right now. So we know this is not the solution. The implementation of this, does anybody believe that our freaking government could properly implement a program this massive in scale when they could barely roll out this capital gains exemption or capital gains tax that they really did with that no one understood or could put any logic or figure out? That would end up being another arrive can issue, a $60 million thrown down the drain before even considering this tax even being put into place, let alone the fact that you would have to hire so many more people for the government, which means more tax money that you're probably going to pay out of your pocket right now to live in Canada. I mean, I feel like we'd probably just see a whole bunch of people leave the country if they put this in place for a variety of reasons. We already said who's to say what the government would even do with this? Like, who knows? Like, are they actually going to spend the money where we want to? Do we have any belief that they would? And even if we did, like, what, again, back to the type of housing, are they going to start taxing our TFSAs, RSPs, everything else that we have at this point right now? I think that just this would completely throw the housing market into complete chaos and disrepair and make housing in general not something that people would even want to be a part of anymore. Taxing the issue, in my opinion, and the opinion of many others, would not only not affect or impact positively the issue of giving and, well, not giving, but helping Canadians, young Canadians get into homes. I think it would be overstepping and completely disrupt the cycle in a negative way, to the point that I think that our total housing market and economy would fall into disrepair. And I truly believe that. And that's not only what I'm saying, but and Derek's saying, but I've talked to a number of very intelligent people about this, and they suggest the same way. I think the real intent of the taxing is not necessarily to give young people homes. The real intent of this kind of tax is to give more money to the government and put more money into a variety of other endeavors that they're failing on right now. Probably not ones that you would even vote on at this point right now. So, notwithstanding the fact that this policy, who knows if it has legs, but it must at this point right now to make it this far, notwithstanding the fact that this policy is likely a failed attempt to, disrupt the system in a negative way, it completely bypasses most Canadians' home and retirement plans, and, well, I think would just basically blow up the system, to put it lightly. It's a short episode here today, and I hope you found some value. We're in the middle of the summer. We've got some great episodes coming up in the next couple of weeks. We might take a break or two for the summer, but I hope you stick around, and I'd really love your feedback on these episodes if you're finding them useful and if there's something more that you want to see. Thank you so much for listening. I'll see you on the next one.
That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.